The dollar balls are getting stronger. Guys, let's break down all the key macro and technical talking points. Morning, 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 baby. Happy Wednesday. I hope we're all well and truly. Yes, we're back. We're back. With another day in these absolutely beautiful markets. Guys, you see how pumped I am. Obviously, I've been pumped for a while now. Okay, I've been pumped just because how everything has been making sense. We've been really enjoying these moves. We've been really enjoying them because we were prepared. We're freaking macro beasts, man. We're macro beasts. You can't tell me everything that's going on in the market is not driven by macros, man. There's so many macros right now, and it just easy as long as we stay in tune with what's going on. They're easy to be on the right side of them. What did I say yesterday? Obviously we're gonna talk about everything in a moment, but you remember how we had that brief little sort of technical pullback? Can't remember. All the days morph into one anyway. Okay, all the days morph into one. For me, just because we're having a great time. Okay, we're having a great time. But you remember when I was just using an example when we're having that period, that pullback with a lot of the dollar pairs, and just saying, oh, this is some people will be thinking this is the end of the dollar rally. The dollar pairs are going to start pushing to the upside now. The dollar's going to start weakening. But I said to you, right, those intraday moves, like when we have those moves, within certain sessions, we get obviously it's technical pullbacks, it's technical corrections, it's profit taking, it's that's just pure technical trading. Okay. Now, and I always say this, what will happen is, which we're going to cover the key fundamentals again, the key macros. But what will happen is those macros will punch the technicals in the face. Punch. A Mike Tyson punch. Nice right. Give it a right hook. A haymaker. And wake them up. Kick them back in the right direction. Anyway, that's enough of the analogies out of the way. Let's speak about the dollar. Okay, let's speak about those key reasons, and just keep, again, we've been doing it all week, but we continue to refresh our memory, right? Just so that you're on the same thinking with me, that you still, finger on the pulse. I don't want you slipping off. You got to stay in this wagon of all this momentum that we're enjoying. Macro momentum. Okay, so with the dollar, obviously, this is beautiful. The way we're pushing to the upside, we were ready for this, weren't we? We were ready for this all the way back here with those geopolitical tensions, with the strong economic data, with Jerome Powell pushing back on those market expectations. Remember, we've seen CME rate cut pricing where we have largely reduced. And to be honest, I'll talk about that in a moment, something else. But look, remember, this was at one point, this was 60-something% chance probability that they're going to cut again, which as I stressed yesterday, I stressed it with a lot of energy tonight, that the markets were fucking delusional there. Okay. They were delusional. All right. One of the key reasons was obviously data, which we're going to talk about. So let's go over all these key macros right now that's driving this dollar to the upside as we're looking for. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon. And it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it, because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Playing out, working breaking down those key zones as we've been expecting. And obviously, I said yesterday, right, watch the grinding down to this 104 mark. And obviously, we've ground it down now, and we've made a clean break to the upside. Let's remove some of these drawings for the moment. Okay, we've made a really clean push to the north, and we're at our highest levels here for the dollar index that we've seen since August, okay, since early August there. And there's still no signs of a slowdown. We've got this cushion now around this 104 area. There may be a possible pullback, but ultimately we should have quite a decent run in towards 105. That's the next major psychological target area, will be us running into this 105 mark. And you could see here in the past when we had that run to the north in 2024, right, with this massive bull run in 2024, we ran into a little bit of supply there. You can see it there also in February. So naturally, we're going to run into some resistance, most likely ahead of breaking through that, ahead of going to challenge the ultimately the 2024 high, because that's what I'm looking at. That the high of 2024, we go and challenge that again and go and print new highs potentially. Okay, so let's keep an eye on this 105 area first to see how drastic of a potential pullback that may occur there, or maybe we just go for a nice rip, depending on the momentum. We've got a lot of momentum right now, which I'm going to talk about. We may just break through that, use it as a new support, and then go and push and go and challenge 2024 high. So what's supporting the dollar upside at the moment? Now, if you look left here, obviously, we've been speaking about this, we're heading into the presidential elections. It's just next month. It's crazy. I can't believe how quickly it's come around. All right, let me just pour some coffee a moment, guys. Bear with me. Need to keep that. Let's get this coffee in the system. Quick sip. Mm. Okay, guys. So look, we're heading into the US elections. This is one of the factors that's supporting the dollar right now because, okay, let one point by point. Start off with what's going on at the moment in the polls. When you look at the polls, obviously there's a number of polls that we look at. Obviously, one of the respected ones is the Reuters Ipsos poll, and this is showing things are very, very tight. We've seen other polls where Trump's been in the lead. Some polls showing Kamala Harris in the lead, but if you look at this one, it's very well respected. It's tight. Okay, Kamala Harris 46% narrow lead with Trump at 43%. Now, when things are extremely tight, guys, that screams uncertainty, okay, where there's serious division, right down the middle almost, split down the middle, and markets, no one knows which way it's going to go. So when no one knows which way it's going to go, because it could go either way, right? Unless you have a crystal ball, it could go either way. Then there's no way to essentially position for an outcome. Okay. If we've got a general expectation, right, a large majority of the outcome that we're looking for, the markets are looking for, then we can start pricing it in, and big institutions, big players can start hedging, or at least start positioning accordingly for that, pricing that in. But where it's split down the middle, they can't. They can't. They don't know. They just don't know. So given that uncertainty for the election, that's supporting some safe haven flows, okay? And what's a safe haven? A dollar. Funny enough, this is how things work. We've seen it in the past. Despite the fact that this is, attributed or linked to the US economy, this is the US presidential elections, right? The dollar will still act as that safe haven. So it's been supported by safe haven flows, the uncertainty around that, okay? I hope that makes sense. Remember, the dollar's a safe haven. At the end of the day, it's still the reserve currency of the world. It's the largest economy in the world. All right. So we've got a bit of anxiety there. The market's got anxiety. Now stay with me. Okay. That's one. Now, the second point is, look, obviously we've seen in recent weeks, how I just explained there about Trump. Okay. Trump, we've had this Trump trade effect where Trump is obviously gaining large, support in the polls, large support. And we can see some polls have been very favorable for Trump. There's a lot of optimism around Trump coming in. Okay. Why? Why does that support dollar to the upside? It supports dollar to the upside, okay, because if Trump comes in, he's made it clear again that tariffs. You know how we had this trade war essentially between US and China. Trump wants to introduce more tariffs on Chinese goods. Now, if we introduce tariffs, it's going to cost more money. Right? Do you understand? For businesses to do business with China. So then these businesses are going to have to put up their prices and things will be inflationary. And in times of inflation, what do you think is going to happen with the FOMC? The FOMC are going to have to consider what Trump's doing if Trump comes into power. And then they may have to keep rates higher for longer. They may have to withhold from rate cuts. If anything, they may have to look at potentially raising rates again. Do you understand that? Because it will cause inflation. Okay. And obviously, so that's that's supporting the dollar to the upside. That's giving the bulls more momentum as well. The Trump trade, that's one of the key things. Just to put that into a nutshell, okay? So you got those two key things that are election focused that are supporting the dollar to the upside. So the division in terms of no one knows what the outcome is going to happen. at the moment. It's so split. And then the Trump trade was obviously been supporting the dollar to the upside. Now, I want to bring your attention over to yields a moment because people seem to forget yields, and okay, and I want to talk about them. Look, for anyone that doesn't know, you must know. For anyone that doesn't know, yields, right? This is the rate of return that foreign investors get when they invest in US government debt. Okay, US government bonds. So this is the 10-year, all right? So you invest in the 10-year, you invest X amount of money, and you're guaranteed this fixed income, this fixed yield during that 10-year period. Okay, so once you've invested for 10 years, the bond matures, and obviously you get your you get your initial payment back, your initial investment, excuse me, your initial investment comes back to you, while obviously during that period you earn that yield. So anyway, 10-year yields have been rising drastically. Now, you know how I always say this thing. This is a famous quote of mine now. It must be, surely. Okay. I know a lot of people message me and say it. It's a Ken quote. Follow the flow of the fucking money. I dropped in the F in there, but follow the flow of the money, right? Remember, dollar will follow what yields are doing. Because if yields are rising, right? If yields are rising, that's going to attract more foreign investment as well. Okay. People can earn a higher yield in the United States. So they're going to go invest in the United States. They're going to go and put their money in the US because they can get a higher yield return. But how do they invest in this? How do they invest in this government bond? They have to buy dollars. It's priced in dollars. Everything's in dollars. Okay. Do you understand? So yields are at their highest level here in the 10-year yields at its highest level that we've seen since July. Look at that strong trajectory. You know, it in fits with obviously that dollar bounce as well. Okay. And you can just see this remains elevated. Look across the board. 5-year. So the 10-year, the 5-year, the shorter time frame as well, the shorter dated maturities, all elevated. So that's another supporting factor as well for the dollar. And the reason for that is because markets have largely scaled back. These would be on the decline. If 50 basis point rate cut was still in play for November, these yields would be on the decline and the dollar would be on the decline. Okay, it all sort of ties in. This is why it's very important that when you're looking at macroeconomics, you just look at you look at all these different supporting factors. Okay, you don't just look at one thing and be like, yeah, dollar balls. No, you build up a case by putting all these pieces to the puzzle together. This is, guys, this is how I'm telling you. This is how you think on an institutional level. Okay, this is how you think, you know, from a big player level. You know, you put all the pieces to the puzzle together. You don't just go, oh yeah, strong non-farm payrolls, I'm buying dollar. No, okay, you have an informed, well-informed view on a macro level. Okay, so all this is supporting the dollar. And then that even aside, right? The delusional markets aside. By the way, just November, markets have obviously largely priced in a rate cut for November. I still think that a cut is not needed. I still think that the FOMC waits at least until December, continue to see more data because inflation's still sticky. And remember how I said about data at the moment from the United States still remains very much solid. This is another supporting factor for the dollar. Data remains solid. Okay, when you look in the recent weeks, as I explained before, you know, we've got a strong amount of jobs being added to the economy. Wages are still high. All of that is inflationary. That's only going to be sticky for inflation, isn't it? Look at CPI, remains sticky, inflation sticky. Then look at the data this week, right? Last week, retail sales is strong. Philly Fed manufacturing strong. And look, data's light from the United States so far this week, but on a sort of a second tier data, Richmond Fed manufacturing, right? Better than expected. The economy is still strong. So it doesn't warrant all these rate cuts. Okay, now let's head over to Euro. Okay, let's just quickly talk about Euro because we've largely been capitalizing Euro. Okay, you know, on the automated systems, on the manual level, it's just been really, really clean to trade. And I just want to mention this for a moment because we're heading into some key areas. Now, obviously, we've been enjoying this, and you know, really, when we got up to this 112 area, we ran into this sort of massive area of supply and this double top. They just fitted in with everything that I've been preaching and everything that I've been talking. Because we're up here in September, I was saying, right? Go back and look at all the rundowns. I was speaking about the Eurozone, right? In terms of the slowdown, in terms of how markets have blanketed the concerns, blanketed the clear economic slowdown that we're having in the Eurozone, okay, that have been blanketed. Obviously, we're speaking about China as well, weren't we? Okay. And when you look at the underlying fundamentals, you can't deny the fact that there's a clear fucking divergence between the Eurozone and the United States. Data in the Eurozone has been slowing down. As we saw with those key PMIs, we're going to keep an eye on these all tomorrow, by the way. We've got all the PMIs coming out from Euro tomorrow. Look at them all. A lot of PMI data. But you see the slowdown previously with those previous numbers. PMIs are important for the Eurozone. Look at it. Germany, the largest economy in the Eurozone. Bad data. Really bad. Okay, so we're going to be keeping an eye on that tomorrow. But otherwise, this has been very much clear in terms of that. When you look at euro, dollar, Eurozone economy, shit, dollar economy still holding pretty strong. Okay, so there's a clear economic divergence. And then obviously there's a monetary policy divergence. Yes, the FOMC cut by 50 basis points, which they shouldn't have fucking done, as I've said. But again, we've spoken about that. That's in the past now. But the ECB are cutting rates, cutting quite consistently now. And they need to, if anything, they need to cut faster. There's a clear slowdown there. I know they want to bring down inflation a little bit more, but there's a clear slowdown. Whereas in the United States, that was a sort of, they've cut for now. I just don't think they're going to be cutting again so drastically. I think it's going to be slow. They're going to slow down that pace a little bit more. But anyway, there's a clear economic divergence. All right. So which is why this is trended to the downside. Obviously, we've largely been capitalizing on these shorts. And when you look at structure, it's been clean. How could you not trade this? Where we had those periods of consolidation, breakout. It's just a resumption of trend to the downside. We've had various pennants, various flags, and it's just been beautiful to trade. Now, you would have seen this morning, we closed out of all euro shorts. Okay. I know we were looking for some more downside. I'm just conscious of there's a big, for me, it's quite a decent demand here. Okay. You see here where we're at now around this, basically 107.70 area, 75. Okay, 75. Basically, these lows here before we had this big surge of momentum to the upside, right? As part of this, this trend to the north. So I'm just keeping an eye on this. I think there's going to be quite a lot of volume there and quite a lot of support. So I'm just conscious of that. All right. Once we've had this, if we end up breaking down this zone, okay, once we've had that and some price action go through that area, we'll reevaluate and look at some shorts. Because ultimately, when we look at the higher time frame, as I said to you guys yesterday, I'm keen for the price to come sub 107 towards this sort of 106.70 towards 106.50 area, and then even looking at a return into 105 territory. Okay, and we'll go into that in a lot more detail. Obviously, we're at Wednesday today, so there's still potentially some opportunities from trades, but we've had a good week so far, and we don't want to overdo it. So let's see how we deal with this region anyway. But guys, you see how exciting the markets are right now, being driven by these key macro themes. That's why you have to have your finger on the pulse and stay ready, stay agile for all these things that are getting thrown into the mix at present. Guys, all of this anyway, I simplify it on a daily basis via the TFTC premium community, right? Where you can obviously tune in, listen to me break down the markets, look at how everything ties in, all the talking points on a macro level, all the key economic data, and then how that translates on the charts. And obviously, at the end of the day, we're looking for opportunities, right? We want to capitalize on this information, use it, give us an edge. And that's exactly what we do. Allied with, obviously, on top of all that, so I have automated systems as well, which are also pumping trade ideas into the community as well, just on the back of obviously the macro environment, taking it largely into consideration that, and all of that I explain anyway, in terms of any trades that are being looked to be executed by the system. What does that mean in terms of on a macro level? Why is that being taken? So on and so forth. So if you want to check it out, you can. You can check out the fundamental bootcamp if you wish as well, if you want to take your knowledge to the next level. I know a lot of you are hungry for that edge, so you can check it out. But otherwise, guys, look, keep watching these videos, okay? I'll produce them as much as I can moving forwards. I've got a lot of exciting stuff to come, by the way, guys. So I need you to jump into that Discord, into my Discord channel. If you're not in there, jump into the TFTC Discord because we have a lot of exciting stuff coming. Other than that, stay lit, stay blessed, and let's get it.